Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 8th, 2010. Now our first position for tonight is going to be in the financial sector, SPDRs, the XLF. Everything looks good here. We've got a fresh triple EMA cross here. Our predicted MACD is crossed the trigger, just going above the zero line. Predicted true strength indicator here is crossing the trigger right on the zero line. So it looks like we're getting into a nice trending move on this particular SPDR. Now our predicted medium and long-term difference here are both pointing higher. They're sitting at about 25, so everything looks good there. Now what we're going to do here though, just to make sure, we're going to we have to try and gauge how deep our pullback here is going to be. So I'm going to bring in the short-term crossover on this one also so we can have a look at this. We can see that the short term is actually crossed over and it's heading downward. So we should expect a little bit of a pullback on the SPDR. Now it's just a question of how far. Now our key levels here, what makes this trade nice is we've closed at 518. Our 18-day predicted moving average is nice and close by at 1488, 1496, and 1511. So for tomorrow, what we're going to be doing is looking to buy on this into this financials XLF, and we're going to start building positions. Now we would like to see this thing moving back over the 1550, 1550, 1560 area. Now with trades like this, I like to go back and look a little bit longer term here to see some of the areas where this thing has been. So right now we can see here we're just under the $16 mark is what we would be looking for as a potential target. Now if we go back further on this particular SPDR towards the 1 year mark, this has been even higher. You can see that we've actually been up here in the $17, $18 range. So right now we should be looking at as a potential, your day traders are going to be looking for a target in the 1550 area, but your more medium and longer term traders should be looking for a move towards 1650, possibly even 17. Now to narrow down our entry point for tomorrow, we're now going to go in and have a look at, again, the predicted high and predicted low. So for tomorrow, we've got 1501 is the low, 1530 is the high. So looking at this, around that $15 mark is where we want to look to get back in to our long positions, and again start building positions in the SPDR, and we would look for a move a little bit higher. Again, day traders, you know, if ever a lot of people focused at very nervous markets, the 1550 should be a reasonable target in the days and weeks ahead, but I really do think we should get back into that 1650 area. So that's our first position. Now our second position, we're going to go back into the foreign exchange market. Now our second position is going to be the US-Japan currency pair. Now we've been trading this one back and forth. A lot of the currency pairs right now in the Forex market, a lot of people really feel they're chasing their tail, and that is trading in the month of December. In my respectful opinion, I see this every single year. You know, it's certainly a time to lower your volume size and open up your stops a bit and expect some volatility. We can see here at the vantage point, triple EMA cross never actually went off. The 3-day crossed the 8-day and the 18-day, but now it's recovering and moving back up. Now there's a number of factors for that. Number one, Japan is very weak, and number two, Obama's just released his extended tax cuts, unemployment, trying to paint a better picture for the US economy than maybe what it is. Could be a short-term move, but either way we're going to try and capitalize on this. Now again, to point out, vantage points, 8-day and 18-day predicted moving average never crossed. So in all honesty, it never really put out a solid sell signal on the dollar yen, so that buy is still kind of in place, and that's consistent with what's happening currently with the US dollar index, which I'll touch base on in a moment. But for now, what we want to look at is our positions here for this dollar yen pair. Now I'm going to bring in some other indicators here to help us with this. We're going to take off the predicted MACD and the predicted true strength indicator here. We're going to go in and have a look at the predicted stochastics and see what it's looking like, and we're going to have a look at the short, medium, and long-term differences and bring them all into our trade analysis for this particular one, because it is going to be choppy. So we can see that our predicted medium and long-term differences are both turning positive. They're pointing up. Predicted stochastic is still not all the way down, so we would expect a little bit of a retracement here before we think about getting into the long positions on the dollar yen. We've breached that 18-day predicted moving average several times, but we're now moved back up above it. So 83.18 would be the realistic area where I would think about getting into these longs. Now again, we've got significant resistance in the 84.20, 84.30 area, but eventually I think that is going to give way. So we've got 83.14 as the low, 84.03 is the high, so we're going to be looking for buy positions off of this 83.14 area for tomorrow. Now, what I want to do is point out what's actually happening in the dollar index. This is causing all kinds of havoc. Your euro long traders obviously getting hammered again today. Even the commodity currencies taking a step back from the dollar. So it's worth a look to go back into that dollar index and see what's actually happening. Now, I've talked about this yesterday, that I felt that there was some support building in this 79.14 area, and you can see that that's actually 3 days in a row now. We've not been able to get down to the 79 level, and we're starting to move back up. Again, the predicted MACD and the predicted true strength indicator are running flat. This is indicative of further dollar strength. Now, looking at the short-term crossover from Vantage Point, it's not yet making that crossover back up. Now again, I don't think we're going to see that the medium term is going to either, but you can see that they're running almost flat. Now we also want to look at, in this particular case, look at that long-term crossover. I think it's worth looking at because again, we've got a very mixed signal here. Now the long-term indicator, you can see, has not crossed over to the downside. It actually never crossed over to the downside, and that's the beauty of the Vantage Point system, in that it does have multiple crossovers to confirm a trend reversal. We can see that trend reversal has not happened, and one of the key leading indicators is the 3-day crossing over both the 6-day and the 18-day predicted moving average. I also want to point out that has not happened here. So everything here points towards further dollar strength, and dollar yen is likely one of your safer bets in this particular case. But again, expect volatility this week. So those are the market positions for December the 8th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.